Hello. Hello, good morning. Mic's not working. It is now. I'm back. Morning, Danny. Morning, everybody. Blimey, there's a lot of people in here. Morning, Danny, David, Sol, Evil, Marco, FTNet, Paul, Peter, Virginia. Another down day. Yes, another down day today. Morning, Chris. Morning, Reverend Joe. Chris, again. No sound. Yeah, no, that's fine. Morning, Gregors. So, yes, another big drop today. Morning, Ryan. So, yeah, we'll see what happens. Um, at the moment, basically, I'm flat position trading. I am literally just trading 5 minute charts at the minute. There's no point in trying to do anything long term at the moment. No indicators are going to work. No fundamentals are going to work. Just sit and watch. Basically, the entire market is in absolute free fall chaos. So these are the times when you have to sort of sit back and go, we'll just wait and see what happens next. Obviously, this is Powell last week. No idea, basically, was the upshot of what is going to happen. The fear and greed index has gone. There it is, to 4. I have never seen that ever. 4. I've never seen anything really double digits. I have seen a double digit before, but a single digit rather, but very, very, very rare. A 4 is this is almost like apocalyptic. This is just ridiculous. You don't get down to these levels. So I post out this morning on the Discord channel about ADR and how this is going to affect your normal ADRs. Okay, so all my opening range breakout EA settings have been changed to an ADR 3. Because ADR 10 is no use to you. No indicator is any use to you whatsoever. The RSI is knackered. The moving averages are knackered. Everything's knackered. So don't, price action trading, no problem. Look at candlesticks. They still go up and down. You still have the same things happening. It's just everything's much bigger. ADR at the moment, obviously, is a calculation of the last 10 days average range. When you look at what's happening at the moment with something like the Nasdaq, for example, this is a normal range on the Nasdaq is something like that or that. That's a fairly nice big day there. We've gapped down larger than the largest day in the previous 10 days, and then we've moved more than the previous 10 days, and then we've had this day go in here, which is 300% of the normal daily range, then another gap down. We've already done 150% of the normal daily range today before the markets have even opened. So all ADR calculations are going to be off. So if you adjust your ADR to look at the last 3 days worth of price action, so that one there, that one there, and that one there, the ADR 3 basically takes into account what happened before Trump announced the tariffs, what happened when Trump announced the tariffs, and that massive sell-off that we've had start. So if this is going to be normal price action for the foreseeable, we need to adjust ourselves to what is going on at the moment. So all indicators you use, you need to tighten them up really tight to make sure that they're giving you readings of what's going on right now, not what's going on 10 days ago. 10 days ago, we didn't have tariffs. That is absolutely irrelevant. All of this data is useless to you. Yeah. So where you can adjust. So I posted in the Discord channel a difference between the two. I can't really get that up, can I? But I'll show you one here. Excuse me. So this is the Nasdaq. I've got set to ADR 3. Okay, so you can see where the lines are for ADR here. Yeah, so this is ADR 3. This looks like a normal chart, doesn't it? Where we have the price action and then we're going to move off and go towards ADR. Yeah. If I change this back to our normal reading, which is an ADR 10, you'll see the difference is absolutely huge. Yeah. ADR 10, we've already done ADR today. We haven't even opened. on the Nasdaq, but we've already achieved ADR. So you can see the difference. This is an ADR 10 here, and this was the ADR 3, yeah, here and here. So you're better off looking at more recent readings on everything at the moment. We will switch back when the market goes back to normal, but at the minute you need to be adjusting stuff. The dashboard is a prime example here. This is the ADR dash. You can see we've had one ADR hit on the Aussie New Zealand today. We actually have had 125% of ADR hits on most things. If you go to ADR 10, yeah, that's ADR 10. Stuff hasn't moved 100 and 200% of the average daily range on the Aussie New Zealand. It's moved 200% of what we used to do, which is now not the norm. Yeah, so the norm has changed, so we've got to adapt to now what is going on in the markets, okay? So just adjust temporarily. Weekly ranges, for example, utterly useless to you. Monthly ranges, utterly useless to you. What the average weekly range has been over the last 12 weeks is irrelevant. We've done 100% of our weekly range on the Australian dollar, Canadian dollar already this morning. Markets haven't even opened in London. It hasn't. It's just moved what is now normal, which is 500% more movement intraday than we're used to getting. Yeah. So you just got to be a little bit flexible during these times. And as I said this morning in the Discord server, being flat is not a bad option. Yeah. Take a week off. It's in the UK, it's Easter break. Yeah. Kids are off school. Take a week off, because this is an incredibly volatile time. Now, there is an advantage, obviously, to trading during this time. You can make a hell of a lot of money, but you can also lose a lot of money. Yeah, it's still a 50-50 shot. It's just the 50-50 shots are moving a lot more. So just be very, very, very careful with everything that's going on at the moment. Obviously, going back to last week, we've had a lot of stuff come out of Powell on Friday. The Fed is well positioned to wait for greater clarity before considering policy adjustments. Read into that. I haven't got a clue what to do with policy adjustments. We'll wait and see. It's too soon to say what will be the appropriate path for monetary policy. Trump's blown the world up. We'll have to wait and see. Everything that came out of the Fed was, we'll have a look at the data as we go along, because we haven't got a clue what to do. Yeah. All of these signals you're getting about the futures are useless as well. So there was one this morning, I think it was, and they've changed the wording slightly on it. How they word these alerts that come through with what's happening in the futures market. Goldman Sachs have also Goldman Sachs have been funny. Yeah, it's basically just slashing everything. Get rid of everything, get rid of it all. But yeah, they've slashed China's growth forecast. The growth forecast for every country around the world has gone down, obviously, because everybody's been had their costs put up dramatically. Just trying to find out where it was. Yeah, so traders fully pricing Fed interest rate cuts through 2025, 5 interest rate cuts. This is just the market collapsing. It's not, they're not saying the Fed have said, or the Fed look like they're going to drop rates by 5 times this year. The Fed have come out and said 100% the opposite to this. So a lot of traders are going to go, oh, look, we need to be selling the US dollar because they're going to be dropping the interest rates. No, they're not. They're just selling everything. Everything is just getting flattened. Portfolios are just being flattened. That's all it is. It's not interest rate cuts coming. It's totally the opposite. Yeah, so over the weekend news, not an awful lot, obviously, to report, because it's just the same old, same old. It's utter chaos everywhere. This week, if you look at the news, it's a really short week for news. There's nothing today, totally dead. We've got IV PMIs tomorrow, which don't do anything for the CAD. We've got the rate announcement for the New Zealand dollar on Wednesday morning. This will be interesting to see what this comes out as now, because the forecasts are the forecasts before last week. The New Zealand dollar obviously is not having a fantastic time at the minute. We've got obviously massive drops across the board in the Australasian markets. what quite they will decide to do with those interest rates now may not get that, which means we might get a massive shock move coming on Wednesday as well. So Ueda is speaking as well on Wednesday morning. Again, all eyes on Japan, what they're going to be saying. It's the FOMC meeting minutes on Wednesday as well in the evening. And again, this is just, it's not an interest rate change. It's just what the FOMC meeting minutes were. And I should imagine the vast majority of that is going to be, what the hell do we do now? Because they don't know. So I don't think you can read anything into any of that. We've got Bullock speaking again. Every time there's a talking head from a central bank, it's important to have a listen. We've got CPI for the US, irrelevant now. The consumer price index that happened last month has got absolutely nothing to do with anything. I don't care what happened to inflation last month. It's going up in the US next month. So what if these figures come out as a negative? It's totally irrelevant. None of this means anything anymore. It will do when it's stabilized, but right now, pointless. Unemployment claims, all going to change. That's all going up, so it doesn't really matter what they are. That comes out every week anyway. The GDP for the pound is forecast to go up, basically. It's now going to come down. So again, yeah, it's going to be short-term great, but probably not. We've got PPIs coming next week again. So none of this means anything anymore at the moment until all of this has sort of started to blow over and normalize, and we know whether or not this is the new norm or whether this is some kind of ruse that's going on. You know, none of this makes any difference. So every single economist on the planet has forecast what has happened. I don't think anybody believed it was going to happen, but it did. And now the only upshot of this is inflation through the roof, interest rates through the roof, and unemployment through the roof. Every country on the planet, those are the three things are guaranteed to happen. So there's no point in looking at what they think the CPI numbers are going to be. We know what they're going to be. They're going up. I've got a good example of that. I've got a friend who I go to the gym with, and his business is import-export lighting and sort of luxury goods, if you like, and toys, that sort of stuff as well. And it's all around the world, basically, import, export. They manufacture, they buy, they do all sorts of stuff. His business on Wednesday, costs went up 68%. Yeah, think about that number. Imagine you're in business, or imagine you're living at home and all of a sudden your mortgage company turns around to you and goes, sorry, I know we didn't tell you about this, but tomorrow your mortgage has gone up 68%. Is that okay? You can't do anything with it. You're bankrupt. Yeah. So that's just one example of one business, of one person that I know. Yeah. And that is the reality that we're sitting in at the minute. Businesses are going to go bust very, very fast because their costs have gone up 68% in that particular example. They cannot put their prices up 68% because you and I haven't got any money now because all of our inflation, everything's going up. So we can't buy the stuff. So when your costs have gone up and your sales are going down, it only goes one way. Yeah, this is why the stock market is collapsing. There is no faith in business because business has basically been erased. So some businesses are going to be fine. They're going to be fairly immune. Things like Jaguar Land Rover, for example, in the UK, I use them as an example because they're on the news a lot. They export to the US. They've basically stopped. Yeah. So their entire business model that's been ticking over for decades, on Wednesday, they went, okay, let's not sell anymore. Let's stop. Let's stop exporting. Let's stop selling cars. Yeah. It's their business. They've stopped it. Right. So at the minute, anything you do with these markets, and I say markets in general, it doesn't matter whether it's FX, doesn't matter whether it's indices, commodities, whatever you trade, futures, options, the lot, nothing is going to be normal. So there is no strategy on the planet that you can use right now to deal with this. So it's a new strategy you've got, yeah, which is press the button and see what happens. So nothing's changed in that respect because it's still a 50-50 opportunity. You just can't really use indicators to do this anymore, yeah, because they may look like they're working. And you know, people will be saying, yeah, but look at that beautiful pullback into the 20 MA. This is measuring what's going on over the last 20 candles. It's still going to print the same thing in effect, but the way that you add your risk reward into this is going to be very, very, very different. Yeah, you don't get in with a 10% ADR targeting a 20% ADR when something moves 500% of ADR in a day. Yeah, so that's the main things that's going to change, is the way that you look at this and the way that we try and forecast what's going on in the future, because it's very difficult as it is, obviously, but you can't use any of that anymore. Indicators are just not going to work. They will. It will all come back to normal, because all indicators are a measurement of averages over time. What we need to know is, when is time going to become normalized, which or price come normalized over time, which we don't know. So at the minute, you just got to adjust and adapt to what's going on. You're still going to get spikes on news, because banks and institutions are still going to use news to dump orders into the market, because portfolios will still be adjusted on these metrics. But the scorecarding systems that banks and institutions use to decide whether they are bullish or bearish on an individual instrument is really gone out the water to a certain extent now. So if you're an analyst, that works in Barclays, and your job is analyzing tech stocks, you haven't got a clue what's going to happen with tech stocks now. Yeah, the normal way that tech stocks operate is not going to be the same, because now all of a sudden Nvidia costs 60% more. What's that going to do to Nvidia's share price? Don't know. We've never had a company overnight change its ability to trade by 60%. It just hasn't happened in the past. So there's a lot of new precedents going to happen, which causes complete uncertainty, which causes volatility. So volatility is our friend. Yeah, we can use it to make a lot of money, but it can also completely destroy your account 10 times faster than you can make money out of it. So best thing to do is sit back, reduce risk, and just watch what happens. Watch how this market normalizes. If you want to get into stuff, get into stuff. It's not a problem. I am into stuff constantly. I'm not going to stop trading. I'm just not going to go crazy, because you're just not going to know what what is going to become normal. Yeah, it's going to take one tweet from Trump about one thing that he's had a phone call with about someone in China that could completely reverse 50% of something, just like that. But it may not happen. Yeah, so you've just got to reduce yourself down to time frames where you can see things happening, get into things, and make sure that you are capping that downside as much as possible, and let the upside run. If you see something go with it and let it go, because you can see what's happening. This thing is in absolute free fall at the moment, but there's obviously beneficiaries. So every time you have somebody that loses, you have somebody that win. The Swiss franc, strongest thing on the planet right now. Yeah, if you're in Switzerland, fantastic. If you look at the currency strength at the moment, yeah, what are the safe havens? Yeah, these are going to benefit. The Swiss and the yen are going to be the best things to buy right now. Or are they? Have we had the safe haven run? Is it over now and it's going to go back the opposite direction? Don't know. No one can see the future, but we do know if the markets continue to crash, the Swiss franc will continue to rise. So do nothing but buy the Swiss franc until you are told otherwise by the markets, i.e., everybody's calmed down and it looks like it's all going to go back the other way. Sell the crap out the Swiss, because that's where all the money is at the moment, and it's only going to go one way when it changes. But when's it going to change? Timing is the one thing you cannot do. We can't time the market. The market goes when the market goes. So just be careful, very, very, very careful at the minute. EU is going to be targeting digital services. That's there. So this week on Wednesday, we're going to hear what the EU's response is going to be. There's a big meeting of the European leaders, and they're going to come back with tariffs. They are going to hit them hard, really hard. Yeah, China's hit back that 34% tit for tat. Europe's got something much bigger planned by the sounds of things. So it could really kick off on Wednesday. You know, so whatever you're doing today, if we get a nice calm day today and a nice calm day tomorrow, Wednesday, it's all going to kick off again, because Europe's going to come back with some massive movements. So we will see what happens. So ORBs today. So just one trade on the FTSE for me this morning, which was a loss. This is a new version of the ORB EA with some tweaks. You've got some. This is test data, so just ignore this. It's just variable tracking data that I've got displayed on my chart so that I can see what is happening with the logic, because there's a couple of instances I've identified in the code where there could be differences in this calculation for risk. So I'm just making sure that it is calculating properly. So that's 411 on 357, which is correct. So I'm going to run this for a couple of days just to make sure this logic works, and then I'll push out an update for the EA just to get over some potential issues with the lot calculation, which is not a problem. It's just something, there's every now and again something that you may do in your trading with the EA that could trigger a slightly larger lot sizing than I had anticipated, because I don't do that. So part of the development process with expert advisors is back testing and robustness testing, and in that you can do as much testing as you can, but what you can't do is forecast what people are going to do. So there's certain safeguards you can put into place, but there's certain things that will happen with EAs that you think, I wouldn't do that, but people are. So I need to adjust some of the logic slightly just so that it doesn't go crazy. It can't go crazy because you've got upside limits in it. Yeah, this is why we've got the max lot sizes and things, but I've implemented a maximum risk in there as well now. So there's a maximum amount of money as well as maximum lot size that can be used. I think there was something else that I introduced as well. Oh yeah, there's going to be an option to turn on and off the loss recovery system as well. So, but anyway, we'll get to that at a later date. Right, let me just catch up on the chat. Morning, Ace. You already have orders on NAS. Do you trade it in the mornings? No, NASDAQ's afternoon. Morning, Mumo. Oh, what you mean on this? Yeah, sorry. This is no, not that one. This is a different strategy. This does trade the US markets in the morning. Yeah, different strategy though. Huge movement. Right. Okay. Sorry. Let me come back to normal. This week, EU should decide on how to retaliate against tariffs. Yep. More rough seas on the horizon. Yeah. Yeah, I already answered that. Yeah. So basically Wednesday, that is. So it's not in the news feed. But yeah, Wednesday. Oh no, sorry. Was it the 11th? Or was it the 9th? Got the 11th stuck in my head for some reason, but I think it is the 9th. Yeah, so at some point, so basically all the European leaders are meeting on Wednesday, and they've already got a bundle, a kind of tariff bomb, if you like, that was pre-prepared in case he did what he did, and he's done it. So they already had this retaliatory response prepared, but the size of the response is the thing that they're going to decide, I think, on Wednesday. I think the difference between what they have planned, the Europeans, and what they are going to do is down to the difference in the way he's released the tariffs. What I think Europe were expecting, and nobody's ever going to really know, is that there were going to be specific countries targeted with tariffs. But what's happened is there's a blanket tariff been placed on the entire world. So the knock-on effect of that is if your tariff fight is only with the US, you know what you can do. The trouble is, if you are having tariffs put on other countries that you deal with, you've got to deal with the reciprocal tariffs to that country as well. So, for example, in the UK, I make an electronic device, and America says everything you export to me is going up by 20%. I can go, I'm putting the price of my electronic device up by 20%. what's happened is America have put tariffs on Taiwan, and all the products that come into me come from Taiwan to make my product I send to America. So I've now got to think, actually, what I've got to do is put it up by more to America, because Taiwan's costs have been put up by America, which means my costs from Taiwan have now gone up as well. So everything it gets twice as big. Yeah. So I think that's what they are sitting down to do, is just recalculate how big the bomb is going to be that's going to be pushed back towards him. And obviously, you know what he's going to do? Flick the switch back the other way, and everybody's going to get worse, and it's just going to get bigger and bigger until at some point someone in Washington turns around and goes, Donald, stop it. Yeah. And you need to be brought down a peg. But the trouble is, everybody around him at the moment seems to be of the same opinion. So who knows? It's all going to be interesting, isn't it? But anyway, so that's on, as I say, on Wednesday. So again, you know, we might have a day of calm. We might, I mean, the markets you can see at the minute, they're anything but calm. We've had gaps everywhere. If you look at the NASDAQ, yeah, look at, if you measure the size of the gap on tariff day, on the NASDAQ, it was 10855. The gap today is 7990. So around about 70%. So that was the biggest gap we've seen in the stock indices for long time, since COVID even. We've had 70% of that again today. Yeah. So there's a huge gap down, and the market is not gap filling. It's gapping and going. Yeah. So if we get another one of these days today, don't forget here, there was £2 trillion knocked off the market. What do you reckon? We're up to about 1.2 trillion today, already gone. You know, this is not stopping. There is no reason for it to stop. Yeah, these businesses are screwed. It hasn't got better over the weekend. It's got worse. People like Jaguar Land Rover coming out over the weekend and saying, do you know what? We're just going to stop selling cars to America. How do you think that's going to affect their stock prices? Like, oh, hang on. So you're not in business selling anymore to that place that you sell most of your stuff to? All right. Well, I'm not going to have your stock anymore. I'm going to stick it in. No, it's not going to stop. It will at some point. There will be a bottom, because the valuations will get so low that these companies will actually announce something to say, right, this is what our future plan is, and then they'll go, oh, that's brilliant. They know what they're going to do. At least they're still going to be in business. At the moment, Jaguar Land Rover have kind of said in no uncertain terms, we're just going to take a month off to figure out what the hell we're going to do with our business moving forward. Yeah, because people in the UK can't afford Range Rovers because there's not enough wealth here. It goes overseas. But these guys don't want it anymore. So we're going to have to make a Range Rover version 1.2, which is 50% less. That's our plan moving forward. As if they've got a plan, their stock price will be safe. If we haven't got a plan, no one's going to want it. This is what the Fear and Greed Index is showing. Yeah, what's Fear and Greed Index is basically a confidence meter in the stock market, if you like. Yeah, it's at 4, which means nobody really has got faith in any business anywhere on the planet right now. So you don't buy stocks when you've got no faith in the company, do you? So that's the current situation. So lower day at the moment on the NASDAQ. We are at, this is obviously where we dropped down to in the Globex Open. It's just going to cause more fear and selling when New York opens. We're already down. S&P is already down below Globex lows. Dow is down below Globex lows. The Dow is going to get hit harder than anything else because it's industrial stocks. They're stuffed. DAX seems to be recovering a little bit, holding its own. But I mean, it's obviously down, but we've got some buyers coming into the DAX this morning. So we'll see. Maybe because Europe's coming back with tariffs again today. So there's not a lot of point in doing any analysis today. It's more of a case of we'll have a look through the instruments at what's happening, and see where everything is. But you know, whether or somebody said to me at the moment, is it a good time to start zone trading, i.e. trading support resistance? I honestly don't know. Is support and resistance going to hold? Yeah, the whole premise behind support and resistance is there are blocks of bank orders at prices they need orders executed at. Are they still there? No, probably not. I don't know. Propulsion gaps. Yeah, these are large selling orders, and typically we get ads into them. I don't think we'll ever get back to them, to be honest. So, are they going to work? I don't know. It's one of those situations where you just haven't got a precedent to go back in history and say, right, well, we've had big events before. We've had COVID, we've had financial crashes, we've had banking crashes, we've had tech bubble bops, and there's all sorts of stuff that's happened in the past. But this is a complete new world order. This is a completely different scenario. The US has basically placed a bubble around its entire country and sectioned itself off from everybody. Apart from Russia and North Korea. Sorry, they were the two that didn't get tariffs, wasn't it? Read into that what you will. But we'll see. Right. So let me just quickly see what's going on in the indices. Yeah, so it's a fairly quiet open. If you actually look at the actual size of the open, it's actually very big, but it looks quite calm and small, doesn't it, at the minute, because market's not really going anywhere. So because obviously we're in expanded volatility, so it just looks different at the minute, doesn't it? So I'm going to give it a few days. If we suddenly start getting some of this coming through, some loss creeping in, it's likely because we are stabilizing. And when we stabilize, obviously the ADRs are going to contract back down again eventually. But just going on to what I said about this morning, ADR, don't forget the average daily range is a calculation of the last X days. I take 10 days because it's usually a good measurement. What's been happening in the last couple of weeks? Are we expanding? Are we contracting? And your risk and everything reacts around what the market is doing. At the minute, the only thing you can do is look at the last couple of days worth and assume that it's going to carry on. If the market contracts and we start to go into rangy markets and the ranges start to drop down again, that will come through very quickly into an ADR3 reading. Yeah, we'll get that information very quick and we can start reacting at those levels. If it remains hugely volatile, again, we want to be reacting at those levels. So until I see a good week of what I would call normalization in the market, as in it's doing the same thing every day, roughly, then I think I will start to look at expanding the ADR out back to maybe 5 days, then back out to 10 days eventually, which is 2 weeks. So we need 2 weeks worth of normal markets for any kind of indicator really to start working. If you think about it, every indicator that you look at that uses anything to do with daily movement, it's not going to work at the moment, is it? Anything that you're using short term will do, but there's a lot of different price action going in at the moment, so it's not going to be the same. You can't really buy the Swiss at the moment because it can reverse at any moment. You can, but that what you're saying, Vitaly, is the same thing as happens every day. Yeah, it can reverse at any moment. Correct. That how is that different to any other day of the week? So the Swiss franc at the moment is benefiting from this move, and at any moment it could reverse. Yeah, but it could also carry on like this for another 2 weeks. I mean, the Swiss, like I say, the Swiss franc and the yen will continue to benefit from this situation because they are safe havens. You need to pull your money out, but it's only a safe haven at the moment because it's unaffected. If Trump comes out and suddenly says Japan has another 200% tariffs on it, that yen is not going to be a safe haven anymore. Yeah, because it can be attacked. The reason the Swiss is so safe is because it's not part of NATO. It's not in the EU in respect of using the euro. It's a neutral country, and its main business is banking. That's why it is a safe haven. If all of a sudden, for example, Europe decides as part of its retaliatory measures to put digital taxes in place, and also foreign banking import-export of capital at a premium, Swiss doesn't become a safe haven anymore. So they can hit Trump by hitting other countries, don't forget. This is not, you don't have to fight back at that country, right? If Russia and the US suddenly drop sanctions and become massive trade partners, we hit Russia, yeah, because that hits the US indirectly. Yeah, so there's all sorts of, this is the complexity of it. There's so many things to work out for all the banks and institutions at the moment. There's not a straightforward way to deal with any situation. But right now, the Swiss and the yen are the two countries that are going to benefit financially from this. But when this all calms down, if this all calms down and blows over, it will inverse 100% of what it's done. Because when this meter turns from fear to greed, we go from 4 to 96. Yeah, the opposite happens. The Swiss franc every penny will be dragged out of the Swiss franc into risky assets like stocks. But stocks may not be the investment vehicle of the future. Or it may not be US stocks. It may be Chinese stocks that are the that are the investment vehicle of the future. Yeah. So at the moment, most pension funds, hedge funds, and fund managers in general, for whatever it may be, focus on S&P 500 as the main investment vehicle because it generates on average over a decade an 8% return a year. Yeah. What do you normally get from your pension? 4, 5%? Yeah. So they can guarantee making somewhere between 5 to 10% a year every year, and they always have done. But that's because the US has been the strongest economy in the world's currency. It's not anymore because we can't deal with them anymore. They've basically placed a bubble around them by putting trade tariffs on, which means that we can no longer use them. Yeah, this is the bit that Trump's obviously he understands. This is the thing that everybody's confused about. You're a businessman. You're a very good businessman. You're a multi-billionaire. What the are you doing? Why are you doing this? It doesn't make sense. You're destroying the country that you live in by saying you're going to make it great. Yes, you've got a plan going forward, but the plan is just destroying everything right now. Yes, you were expecting a downtick. I think if you look at the feed, he said, didn't he, this week? And the memes came out pretty damn quick on this one. But he said something about we have to take medicine. And we were like, yeah, do you remember in COVID, you told everybody to inject bleach into their bloodstream? You're not that clever, are you, with medicine? So probably not the best analogy to use. But anyway, spoken to European and Asian leaders. I'm not intentionally engineering a market sell-off. Well, tell that to the conspiracy theorists. Sometimes you have to take medicine. Asked about the market. Sometimes you have to take medicine. This isn't medicine. This is cyanide. Yeah, this is not medicine, is it, really? But anyway. But yeah, so the Swiss and the yen obviously are where you go at the moment. So if we're looking at short-term trading strategies, yeah, come down onto 5-minute time frames, 15-minute time frames. So this is 5, obviously. We're looking for continuation. So there's a reversal alert just gone in on the Aussie Swiss today. Yeah, and it's market structures in. Sell propulsion gaps. Yeah, ignore bullish reversal alerts. Yeah, take bearish reversal alerts. If it suddenly goes into an accumulation and goes sideways and then breaks out, take the breakout. Yeah, that's you've got a bias at the moment, and assume until you are given some indication by the market otherwise, i.e. a bull day, for example, against the Swiss franc, assume that it is just going to do the same thing. Same with the stock markets at the moment. Yeah, breakout shorts, breakout longs are going to be harder to make work, aren't they? until the market turns. And at some point, there'll be a breakout long and it will hold. And then it's like, oh, okay, we've got some bull price action. And we could do that for 3 or 4 days on the trot. Yeah, but it's no different to any other market, is it? Except the ranges now are 10 times bigger than they used to be. Look at the ADR dash, these weekly ranges. Yeah, I mean, look at the monthlies, right? We are on the 7th of the month. We've done like 225%. In fact, we've done more than that, haven't we? Really? But I mean, 225% of the monthly range in basically 4 or 5 days. Useless. You can't use any of it at the moment. And assume it's going to continue until it stops. Yeah, and when it does stop, then we'll start thinking about how to deal with that. But right now, as far as I'm concerned, I'm trying to stay on the same path as everybody else, which is sell the crap out the stock market and buy the Swiss and the yen. That's really the crux of it, isn't it? Morning, Lucas. Currently working on a web app that will start from the basics. Of financial juice and go into more detail by using AI analysis aimed at beginners of the financial market. Don't know if people would want it. At the moment, it's useless. Absolutely no point in it because it's fundamentals don't mean anything anymore. Not for me. We have the human version. Yeah. He's not human. He is superhuman. I wish. I don't want to be superhuman. If I could pick one superpower, do you know what it would be? I'm pretty sure you do. Morning, Mark. Hope you're all safe, not losing. No, doing very well at the moment, but that can change. See, this is a good example of what the issue is at the minute. Look at the stop loss here on this order. How tight this stop loss is. Because obviously we use the average daily range. The average daily ranges are very tight now. This is the problem with volatility. If you don't adjust, this is why we use ADR, and you should use ATR all the time in your trading, because you adjust with the volatility of the market, but the volatility of the market is so variable on a daily basis and so variable intraday. It's almost impossible to place a stop loss anywhere. You know, it has challenges using stop losses, obviously, as we know. But right now it's even more tricky. But equally, to get from there to there, that's 2R. Look at it. It's 2R. That doesn't look like 2R, does it? It can make it in one 5-minute candle. It can do 2R in one 5-minute candle at the minute. Yeah, that's 10R. It's very easy to make money very, very quickly, but it's very easy to get chopped to death very, very quickly, which is why I say reduce risk. Just sit back and wait for the market to figure out what the hell it thinks it's going to try and do. Right. So just doing some analysis on obviously RSIs. Again, same thing. We had RSIs last week, sub 5. Never seen that before. I mean, we had some RSIs last week on some instruments, which, were, what did we get down to in the end? 3.57 on the Aussie Swiss. Look, never. Oh, yeah, no, there was one. Oh, where's that? August 24. So we had one there at 2.6. No, we have had one down there before, but look where we are. And look what happened afterwards. But it's not normal. This is totally different to the past. But, I can't give you any guidance on this because I haven't got a clue. But every bone in my body is telling me to long this. Every bone in my body is saying you need to buy this now and hold it until we get back up to here and pay off your mortgage and go in big. But every other bone in my body, it's like having the devil and the whatever angel on your shoulder. Yeah, both bend in my ear at the minute saying this is the opportunity of a lifetime, but it's also something we've never seen before. So, you can always look at the worst case scenarios in the past, but the worst case scenarios are always outdone by a new worst case scenario at some point. But right now, look at it. I mean, market structure shifts on this. When you get a reversal alert and that reversal alert holds, this could be the reversal alert that starts the complete unwinding of the entire move. If it is, you get in big. In fact, I'd get in small and then scale in rather than getting in big. But you know that there's massive opportunities. But these RSIs, you know, we had some RSIs last week which were just, you know, stupid. Mainly Swiss franc, which you'd expect. So we had 7 on the US dollar Swiss there, but you know, it's the price action is all over the place at the minute. It's just big. That's the thing. It's just big. So using the last 3 days, really, 2 days, in fact, at the minute, but 3 days to give you some indication of where you're going distance-wise, best thing to do. Time travel, just 5 minutes in the future. That's it, Franco. You guessed it. If I had one superpower, it's got to be time travel. If you have time travel as a superpower, there's nothing you could ever need, ever. Because you just go forwards 5 minutes, find out what the next 5-minute candle is, put 100% of your balance on that, and win every single trade. If you can forecast the future, you will never want for anything again. And that's what people have been trying to do on YouTube for the last however many years it's been since YouTube has been formed. Convince you they can predict the future. That's been in my mind all weekend. Opportunity or horror? Yeah. You know, look at the there's plenty of instances we've had in the past where we've had safe haven runs. I'm looking at the Swiss specifically because obviously this is what is going to move the most, apart from the stock market. You know, look at this and then look at this. Yeah, 50% retracements. I go on about them all the time. It's because it's just what happens. So if you look at a 50% retracement from that low to where we are now, if you take the reversal on the US dollar Swiss that we've had today, you've got a massive upside there. This is ADR 3, a normal ADR 10. You're looking at a 300, 400% move up. You get in with these with big risk. You know, it can really pay your year. And I've had the start of a year where I kind of would like to get back to where I think I should normally be. But yeah, I mean, there's plenty of opportunity, but is it? You know, this is not over. The Europeans are going to come back on Wednesday with a massive hit back. That has the opportunity to undo a large portion of this move, potentially. But when have you last seen that happen? So is it going to be the market reacts like that to it? We don't know. We just don't know what's going to happen, do we? So like everything, it doesn't matter what happens if you have correct risk. Yeah. So your job as a trader is a risk manager. If you believe that the reversal alert that we've just had here on the 5-minute time frame is the one today, oh, sorry, we haven't had it yet. We're just about to get it on the next candle close in the next 5 minutes, potentially. If you think that the reversal alert that goes in here, if it happens in the next 5 minutes, is the one today, take it. That's your risk. Somewhere down here, doesn't matter where you put it, somewhere down here, you're going to put an order that says, get me out of the market if I'm wrong, and you're going to let it run. So risk is your job. That's the trader's job, is a risk manager. So just manage your risk as normal. Just don't try and predict long-term movement at the moment. That isn't possible. Because if this does work, this reversal alert here that you're just about to get, and it gets up to there and then pulls back and then it pushes up, and then you add a little bit in there and you think, yep, this is going really well. It's going really well until someone opens their mouth. And that is what is going to move this at the moment. Someone will open their mouth, and that will either make you really, really rich, or it will just kill your order. But manage your risk. Fast break-evens. As much as I hate break-even stops at the moment, this is a scenario where you use them. Reversal that's just about to go in. But don't forget, the rest of the world is also watching the 20 moving average, and they're going to be selling it. So what's going to happen? Who knows? You know, markets are in turmoil when the viewership jumps up. Oh yeah, look, 64. Yeah. But yeah, this is it. You know, it's panic. It is panic everywhere. There's people all over YouTube at the moment and all over social media going, hey, look at all this amount of money I've just made. Well done. You pressed the short button at the right time. Yeah. Anyone can press the short button. If I'd have pressed the short button last Wednesday and put a stop loss above the high, I too would be in a very large profit position. 500 times bigger than any other trade I'd taken. I know I'll start up a YouTube channel because I've just become a brilliant trader. You've just got a lucky pop. Well done. Everyone can do that. Who hasn't done that? Who hasn't placed an order in the market, forgotten about news, and the news has popped you up and you've gone, holy crap, look at that trade. You forgot the news was coming out. So you actually did a really bad job. Well done. Tons of that out there at the moment. You just got to ignore it all. There's system hopping. This is for me, right? If I wanted to make a load of money now, do you know what I would do? Put a load of adverts out on Facebook, because everybody on the planet right now is looking to system hop, because the system they were just trading is failing. It's not working anymore. And they're going, oh, it doesn't work. Yeah, no, it does. It's just not going to work through this. Nothing's going to work through this. Yeah, apart from luck and a bit of common sense. Yeah, stock market's collapsing. Do you want to buy it? Yes. Okay. Well, maybe go and read up on what the stock market does and why it's collapsing. Yeah. Doesn't take a rocket scientist to go, you shouldn't be buying stocks at the minute. But you should be buying stocks if today is the day it all turns around. Yeah. But again, come back to that crystal ball. We haven't got one. The weeping and mashing of teeth on Bloomberg is almost funny. Guests are clueless. Crystal ball broken. I haven't actually watched any. I should do, actually. I might do that today. Watch a bit of Bloomberg. Yeah. I mean, this is the thing with finance and anybody in the financial markets. The entire financial markets work on mathematics, historical analysis, and sort of prediction modeling. Yeah. So if you ever work in a bank or any large institution, the highest paid people in those are mathematicians. Yeah. The analysts get paid 125 grand a year in most banks in the UK. Those analysts are incredibly intelligent people. They are recruited from universities having no knowledge of the financial markets whatsoever, and they are told to do mathematical models based on past, present, and future prediction. Every model they've ever invented has literally been thrown out with the bathwater last week. There isn't any modeling for this because every single trade agreement on the planet has just changed. Every company's structure has just changed. Every company's business model has collapsed. Yeah. If you're an analyst sitting there and you come in on Monday morning and someone says to you, should we buy the US today? You're like, hang on a minute. I've got about 6 years worth of work to do here. I'll tell you in a decade. They haven't got a clue. Because you can't predict this. It's going to come down to a lot of lucky trades, basically, at the moment. But risk management is all about diversification as well. So again, this is why the Swiss franc is getting pummeled at the minute, because the diversification models are out the window. Where do we know is safe? Swiss. Yeah, stick it all in there for the minute, because you know that's not going to get affected until Trump comes out this afternoon and says he's putting 200% tariffs on all banking. Then where'd you put your money? If you're not going to use the Swiss, where are you going next? Gold? Russia's got 50% of it. Good luck with that. Where'd you put it? If the Swiss get hit, God, then we're really in trouble, aren't we? Don't know. Bitcoin? It'll all go into Bitcoin. It'll vanish. That'll be the next thing, won't it? Bitcoin becomes the new place where we put all the capital, and then somebody basically hacks something and all the crypto money disappears, so the entire wealth of the world just vanishes. Could happen. Morning. Late today, my ORB had no trades today. I've just been through all that, Don. I posted in Discord about it. Yeah, I mean, you won't get any trades today if you're using ADR10 because they're totally different, aren't they? So yeah, I've had one trade on it this morning, but I've changed to ADR3 for the time being. I might change it back tomorrow. I'll see what happens today. I might adjust it to ADR4. I mean, it's at the point now where with indicator settings, you need to adjust them potentially on a daily basis. So going back to last Wednesday, 3 days ago, so we had Wednesday trading. Actually, sorry, Wednesday evening was the announcement, wasn't it? So Thursday and Friday and today, that's ADR3 tomorrow. So at the moment, my ADR3 is working on Friday's price action, Thursday's price action, and Wednesday's price action before the announcement. So I've got a normal day coupled with 2 nuts days. Tomorrow, if I use ADR3, I've got 3 nuts days. So that is normalized. But that's assuming that Thursday, tomorrow and Wednesday are still going to be that mental. If on tomorrow and Wednesday, for example, price action returns to normal average daily ranges we saw prior to last Wednesday, the ADR calculations are not going to work. Yeah, there's nothing you can do in this situation. There is no magic bullet or setting I can give you to say this is the best thing to do. There isn't a best thing to do. This is just mental. So you just got to sit back. Like I said earlier, take the week off, come back in a week and see what's happened. Are we back to normal? Yeah, brilliant. Let's get on it. Or just do something different. You know, there's nothing you can do with it. Trade manually. Or use, it doesn't matter what you do, does it? It's the end of the day, every single trade you take has got the same odds. It's 50-50. Yeah. You press, right, so we're sitting on the DAX right now. Yeah. ORB hasn't triggered because the ranges are no good. That's fine. So do you think this is breaking long? If it is, press the button. Where do you want to put a stop loss? Stick it there, stick it there, stick it there, stick it there, stick it there. Don't matter. Press the button. Your risk is whatever. If it goes, you make whatever. There's no strategy. The odds are 50-50. It's either gonna or it's not. Where you put the risk is really irrelevant because price action isn't moving normally. Bank orders are not normally executed now. Yeah, banks are and institutions that's driving this up and down are scrabbling around going, what the hell? Yeah, you're not going to find, market structure is going to pull back 17% and then it's going to, all these strategies that use exact this, that, and the other. None of that's going to make any sense whatsoever. So just get in. Yeah, this has tried to go long. It tried to break short. It failed. And now it's looking like it's turning over in a market structure short. Sell it here. Stop above there. Ride it. It's got as much chance as working as anything else. Yeah. Still always 50-50. The trade either goes your way or it doesn't. And if it stops you out before it goes your way, there's nothing you can do about it. It's the world we're living in today. Tomorrow might be different. There will be a stock recovery. Yep. Bargains abound. Companies making real profits, not just manipulation of debt. Yep. It will come back. It will bounce back. It always does. The stock market has to. So think about it, what it is. It's a stock market. It is a market full of the top performing stocks. It will always go back up again. It's how long the bear market's going to last. Yeah, so after when you get an initial collapse, you tend to go into a bear. So we've got the initial collapse. It will pull back somewhere on that leg. And then we will probably go into a short-term bear market. Or we'll go into a bear market. I say short-term. It depends. Look at the COVID. Bear market was 12 months. So people are saying this is bigger than COVID, and it is bigger than COVID. The move is bigger than COVID. The 24-hour collapse is bigger than COVID. So what happened after COVID? Went through the roof. And that could easily happen as well, couldn't it? We don't know. You know, this is the thing. It's an unprecedented situation with no forebear that you can analyze. What's going to happen next? You know, don't forget, they call it a trade war for a reason. Okay, so look at Russia and Ukraine. Russia amassed troops on the border and invaded. Then Ukraine fought back, right? Trump has just amassed troops on the world and invaded. China's just fired back. Europe is firing back on Wednesday. Canada and Mexico got shot first, and they've already fired back. Yeah, they call it a trade war for a reason. Yes, there's no bullets flying and no one's getting killed, but that's not going to stop. It's a war. It is a war, and wars are good for oil prices normally. Oil prices collapsing, but it's only good for oil prices because obviously everything that is involved in war uses oil. This is a different one. Everything involved in this uses finance. So how long is it going to last? Nobody knows. Margins on futures in the US are insane. Yeah. It's that's the advantage we've got in CFDs over here, but we'll see. So there's an opportunity for a profit move on the FTSE this morning, but it's quite slow. This is a lot slower than I thought it was going to be this morning. But anyway, right, FX wise, or rather markets wise, there's nothing I can really say right, this is the best thing to do at the minute. Just trade as normal, but make sure everything is expanded out way bigger than normal. Support and resistance, probably need to look at daily charts, don't we, really, for support and resistance now, because the move we've had, obviously there's I keep saying that horrible unprecedented word, but there isn't one. So support and resistance, as you can see, blown straight through it. What you tend to find in this type of market with its extreme volatility is you're always going to get usually like an overshoot or an undershoot on support and resistance. So wherever you put your line, you need to draw a zone around it, which is why I have the zone trade at EA. So you can find levels, and somewhere around there you're going to get a reaction. So this potentially, what we're seeing here right now, is the overshoot of this most recent 2023 support. If support's going to hold, it's going up. That's as simple as it gets, isn't it? So if you believe support is going to hold here, you get in now and you look for something like that, and you put a stop loss somewhere around about there. Yeah, but position trading at the minute is not really an option, because it's all you can't really position trade with this, because where do you scale in and how do you scale in? I mean, it's just not possible, is it? The normal calculations we use are all over the place. So you can put an order there and an order there at the moment, and see if you can get a position onto it, average in. I mean, there's nothing wrong with maybe getting into a couple of positions on something, but if it's going the wrong way, this thing could be, I mean, it's difficult to find something you can really look at on a chart and say, this is the sort of thing that can happen. And there's COVID, obviously. Yeah, look at the size of the COVID collapse. Let's measure it. So that's the COVID collapse from peak to trough. And that is where we are at the moment from peak to trough. So we're potentially 3/4 of the way into a COVID-esque move. So, this is, are you still shorting it down to there? Or are you thinking it's not going to be as big as that? You just nothing to look at, really, to say anything. COVID didn't have any respect for support. I mean, there isn't really any support. You can't. I mean, I can't zoom out anymore because there's just nothing to look at, really. But there's no support at all in this type of market. It's just going to blow through what it needs to blow through on its way to wherever it's going to go before it stops. So it's an impossible scenario. But if you want to trade support resistance bounces, obviously, and they work, you have got an extremely good price point to just basically get yourself back to break even and hold. And so everything is a potential long-term hold. I mean, there's nothing I can do to go and look at anything. This is the lowest point we've had. We got a lovely support bounce back out in 2024 on that. We've blown through it, not just blown through it, we've gone through it by like 500% of ADR in a 24-hour period. So, there's nothing to use. There's no indicators to use. There's no levels to use. There's nothing to use here. You just need to get in. and decide what you're going to do. Gap fills. 90% of gaps get filled. Do they in this situation? I don't know. So, if you want to play the gap fill, play the gap fill. You've got a lovely reversal alert and retest. This is now turning into a bullish engulfing on this. This is the sort of opportunity you need to look at. We've had a reversal alert. It's retested. We've got lovely downside wicks. We're putting in a 3-bar reversal. If it breaks that high, I'm taking it. Yeah, there's your W pattern reversal. You've got 2 choices of stop loss, and you've got a target initially for an upside gap fill. Yeah, you've also got a target of return to origin. Yeah, that's all you can do, really. So using indicators like the reversal alert, market structure is still going to be there. Probably the best indicator on the planet to use right now is the reversal alert indicator, because it's showing you market structure. It's showing you who's in charge of the market. At the moment, the bulls are in control of this market today, right now, because nothing's been mentioned. But something gets mentioned, it's literally could be down there in 2 hours. It could also be up there in 2 hours. Yeah, so just get in is all you can do when you see something that looks good. But don't try and go, I've got this strategy that looks really, really good. Price action is key. Price action is king. Always has been. Price action leads indicators. Price action is what is happening in the market right now. Who is in control of the market now? The bulls. Yeah. So right now it's a buy. Unless you're of the opinion that we are going to accumulate and break, in which case you want to be a breakout trader to the downside. Yeah. Sell the highs up there if you want to get in a really good breakout short. Yeah. There is no right or wrong in this situation, is there? All the yen pairs, looking at this is, again, yen intervention. There's your yen intervention. There's the move so far. Yeah. This is what can happen when something happens that has never happened in the past. Yeah. So the yen intervention is probably the closest we've got to what is happening at the moment. The Japanese liquidated all overseas assets and all overseas US bond purchases to destroy the US dollar and bolster the Japanese yen in preparation for interest rate rises. They manipulated the market. Yeah. Trump came out and said, I'm not doing this to create a market sell-off. Prove it. Yeah. He says he's not. I say prove it. He says, no, you prove it. Doesn't matter who says what, does it? It either is or it isn't. So that is potentially what we're looking at. We're here. Yeah. That's where you've got to go to. Supports all the way down there. Could get down there easily, couldn't it? But it could just bounce all the way back up again. Yeah. The yen is strong at the moment. It will be because it's a safe haven. So, or is it? We're assuming it is, but this all changed here. 20 years. Yeah. And this is what happens when the market changes to something it's not done before. For 20 years, the Japanese used negative interest rates for 20 years. Then they suddenly went, we're putting our interest rates up. And the market was like, what do you mean you're putting interest? You don't use interest rates. Now we do. And they warned and warned and warned about intervention, and then they did it. It's equivalent of the Hiroshima bomb in the stock markets is what they released, which is what we've just had released again. Yeah. So it's that type of movement that we've potentially got still to come. Or is it bigger? You don't know. But my point is, you don't know. So just use price action on small time frames. You want to be down here. You want to be being able to get into the market and out of the market every day and going away without leaving risk over the weekend or overnight. Because while you're asleep, something gets said. If something gets said or something happens while you're asleep, you cannot react to it. If you've got a stop loss in place, it will or won't get honored. There's nothing you can do about that. But that's the sort of movement that we're looking for. So everything this morning looks like it's all starting to reverse, doesn't it? Yeah. So Aussie New Zealand, huge collapse on the Australian and the New Zealand markets. Obviously commodities being hit very hard. So again, lovely support bounce going on at the moment. Is it? I don't know. the question you have to ask yourself, support and resistance, supply demand trading is all based around institutional iceberg orders. There was a large order there that wanted to hold the market and drive it long. Are the participants that started that move still in the market today? No. Yeah, this is June 2024. They're out. They're definitely out now because every institution on the planet has liquidated everything into safe assets. So that, you know, it's still moving here because people are people. People in banks are people as well, don't forget. Yeah, people don't put the two things together. Oh no, the big banks are moving the market. Who works in the big banks? People. People buy what they see. Institutions buy and sell what they see on a chart. Yeah, this could be the bounce point, and if it is, if you believe it is, get in, put some risk in, and hold it. Yeah, or go down to a low time frame and just keep buying every bullish reverse alert you see, ignore every bearish reverse alert you see, get out, wait for the next one, take the next one, but get in and get out and get in and get out rather than getting in and staying in, because getting in and staying in, one of two things is going to happen. You're going to get in, you're going to do that, it's going to go up and you're going to go brilliant, you're going to move that up to there, it's going to come down, it's going to stop you out, and then it's going to go like that. Yeah. Get in, get out, bank the money, take the money when the money is presented to you, because if you get in with the belief it's going to go all the way up to there and it gets halfway to your target and then another bomb comes from Trump, you don't get paid, and you can sit in it for days and not get paid. If you get in and get out intraday, you're getting paid every single day. You're constantly taking the money. Yeah, the move's still going to happen. Why not just get into it 20 times rather than once? Get paid 19 of them if you get one wrong, aren't you? Yeah, so much better, I think, personally, to be in and out as fast as you can at the minute. And you want to be using indicators that use market structure. Yeah, so the reverse alerts indicator, M pattern reversals, retests, yeah, propulsion gap, support resistance. So this is a large order in one direction that's been bought up twice. Buy it. They're buying it. You buy it. Yeah, same stuff, except at the minute you just got to be less risk. Aussie dollar, US dollar, watching for a long, but not going to lie. Scared a little. Yeah, well, you will be scared. If you're putting money into the market and you're scared, though, lower the risk. Make it not scary. We can decide not to play. Wait for the blood to be mopped up. Yeah. Still costs a lot to hold it. Yeah, so again, swaps at the minute, obviously, bear in mind swap costs. The yen specifically, you know, if you are going to long the yen, which means you're going against the safe haven buys, which are going in at the moment, you're going to be paid to hold it. If you're going to short the yen, which is obviously what you want to do in a safe haven run, it costs you money. So, you know, this is, I mean, anything long term at the moment, swing trading, you know, there's a different opinion on everything. This is why markets exist. If you didn't have different opinions, you wouldn't have buyers and sellers, therefore the markets wouldn't exist, would they? But there's a lovely, on this Aussie yen here, there's a lovely reversal alert retest just gone in, look. Yeah, so you got a reversal alert, it's come down, it's retested, they've added more size, and we're popping up again. So there's your W pattern reversal. Buy it, stop, whatever you want to do, add some more when you get above that high. Yeah, you're long in it. They're paying you to hold it. Hold it if you want. But if you're shorting it and it suddenly decides to go into normal price action, it's going to cost you that every day you're holding each contract. So just bear that in mind with any long-term holds. You know, that's why just at the moment, I just think getting in and out intraday and taking some money out of the market is a really good thing. If you can make consistent bank in this market, do it. If you're trying to go for those home runs, bear in mind those home run hits are rare. Yeah, these are the ones, you know, I've said it before, these are the mortgage payments. Yeah, this is where you get in with a 5k risk and then you add another 5k risk. You pull yourself to break even and you sit there and you hope for a week that you've got enough there to pay the year's mortgage off. That's the thing. Yeah, depending on the size of your mortgage, you can pay off 30% or overpay by 10% or whatever it is. Those are the home run trades. That's what I class as a home run trade. If you can get one of those a year, fantastic. You won't have a mortgage for as long, will you? But But these are the opportunities. These markets, when this is doing this is that time. But your odds of that home run working, it's either going to do that continuously or it's going to do that. The hard thing as a human being is looking at something that happens over and over and over again and adjusting your mindset to the opposite thing happening. Yeah. Every bone in my body is saying this is a long, because every time I've seen this type of movement, it's gone the other way. But I've never really, on a chart, I've seen this type of movement before. From a world economic perspective, I've never seen this before. So my technical brain is saying, yeah. My brain that is like, this is the start of the collapse of economics throughout the world, is saying, do not buy the stock market. You're always going to have those things going on in your head and everybody else's as well. This is why it's moving. Yeah. The old bones are screaming. Yeah. But, gap fills, gap fills fill. Gaps get filled, don't they? I'm long on this at the moment. Gaps get filled. So, but gaps get filled in a normal market. It's not a normal market, is it? Aussie dollar US. I'm just going to go whiz through some of the instruments. Just have a quick look at them. Again, loads of downside to COVID support. Loads of it. But COVID, that was a multi-day event. It lasted about 4 to 6 days, depending on the instrument, to do that. We had 50% of COVID done in 24 hours. It's like, if this is the start of that type of sell-off, we are only just getting going. Wednesday with the euro, because obviously the biggest market that's going to combat the US is Europe. Wednesday is their shot. Yeah, so this is why I'm inclined to say it's not over yet. CAD Swiss still coming down. So again, Swiss franc still benefiting, not to the same extent that it did last week at the moment. But, markets have only just opened. We've still got plenty of time. CAD Yen not moving anywhere near as much. But we'll see. Again, intervention. That's all we got so far. But we'll see. Euro, obviously, off the silly heights. But mean reverting this. If you look at virtually every large move of exhaustion, it ends with something. It starts with something like this before the reversal happens. But this is not happening because of an exhaustion. This is happening because of a volume spike. So look at that for a move, potentially. This is how much we normally move in a day. Yeah. Look how many days it's going to take to get all the way back down to here. Anyway, there's a play there. You've had a reversal alert, low time frame. There's options for shorting this right now. 15-minute, 30-minute. Who knows? Euro CAD, a lot less volatility on the Euro CAD. Euro Swiss, again, we're gapped down on the Euro Swiss. Trying to get back. Euro, very strong Euro this morning. Look, very strong. Euro Yen, gap fill, done pretty much. Euro Pound off. These are like stock charts, aren't they? Get overnight gaps and just bizarre. Can't make any head nor tail of it. Euro New Zealand's off to the highs. Euro US. So again, that one's very less volatile. A lot less volatility in that at the moment. Resistance. Is it or isn't it? Who knows? Pound, obviously very strong against the everything's strong against the Australian dollar and New Zealand dollar at the moment. CAD, not really a lot of movement. Swiss franc, everything collapsing. Same with the yen. And again, US, look, we've undone. Look at that. Totally undone. So now what? Where do we go from here? We're not retaliating. So don't forget, we've had hardly any tariffs, and we're not going to retaliate. So at the moment, we are sitting here, business as usual. New Zealand CAD. So yeah, just sell-offs everywhere, obviously. So very tricky. So stock market wise, gold. What's happening with gold at the minute? There's a surprisingly small reaction to gold. Look, almost you could say that's normal price action, but obviously it's big. But yeah, very odd reaction on gold. But it does seem to be coming all the way back, doesn't it? DAX. So DAX basically gap fill is in play. Big rejection to the downside on the DAX. Look, I think there's a lot of people buying stocks up this morning. But look at that. I mean, this is a daily chart, yeah? So we have basically in 72 hours, we have undone 4 months worth of movement in 72 hours. 3 days, 4 months worth of price action. Taken 4 months to get from there to there. Unbelievable. Absolutely unbelievable. So yeah, in 24 hours, we took price back down to levels that we haven't been to since December 2023. So in 24 hours, pretty much we undid 50% of an entire year's worth of movement. Staircase, yeah. So I talk about a lot climbing up the stairs and falling down the elevator shaft. That's a normal price action movement. Obviously, that is institutional buying and then profit taking. This is obviously profit taking, but it's the same thing, isn't it? But looking at the Dow, I mean, the Dow is industrial stocks. I mean, it's going to get hit hard, obviously. But, there's your COVID move again, 108,331. We've done half of that roughly in 24 hours. But that COVID move from there to there took 2 weeks. So we've done 50% of that size of movement in 24 hours. So obviously the volatility and speed of this move, this is why they're saying this is worse than COVID. The speed of it is worse than COVID. But COVID, we had a little bit of rumor, uncertainty. What do you mean? What is? We didn't know what a pandemic was. This is very straightforward, clear cut, isn't it? Your business's costs have gone up 68%. Shit. Yeah, there's no thinking about it. It doesn't take a rocket scientist to understand that if your business goes up by 68% in costs and you do not put your costs up by 68%, your bottom line drops. Therefore, the profits you're going to make are going to drop. Therefore, your stock price drops. That's, there's not an economist and most human beings on the planet that don't understand that. With COVID, we were like, what do you mean they're locking down? What's a lockdown? What's Italy doing? Yeah, and that took a few weeks for everyone to hang on a minute, something's going on. Well, let's be safe. And then that's when the panic started. So this is a different situation. So you can't compare it to COVID. A lot of people are comparing this to COVID. It's a totally different execution of panic that we're seeing here. So yeah, at the moment we are holding, I would say today. So what happens at the end of a move? So I won't be too much longer because obviously I understand I'm waffling today. But at the end of a strong price movement, we get one of two price action patterns forming. We either get a long tail of some description, which is an exhaustion move. Yeah, which means the market basically cannot sustain those prices. There is no interest to continue selling at those prices. Therefore, we push back up again. Or we get a 3-bar pattern, which causes market pause and reversal. So you get a pull, a pause, and a push. Yeah, and that is a 3-bar reversal. So 3-bar reversals will have one of two patterns in bar 2. Yeah, and at the moment, that is what we're doing. So this could be the start of a recovery until Wednesday. Yeah, or until Trump opens his mouth. Don't forget he's asleep. Yeah, he's asleep at the moment. Can't do anything. Can't hurt us while he's asleep. Oil prices as well, I just wanted to quickly touch on this morning. Yeah, $60 a barrel is seen as the healthy price point for oil, which is there. Okay, so there's $60 a barrel. We are exactly at $60 a barrel. Yeah. Below $60 a barrel, it starts to become difficult for markets to transact and difficult for economic growth, basically. So you'll find that oil will always try to stabilize here. This is a healthy economy. Usually you've got contracting inflation, or you've got stable inflation, and everything's like, this is your happy place, if you like. When we get below the happy place, COVID, for example, you tend to not want to stay down there for too long. There's a lot of resistance to being down there. So we've come crashing straight down into it. Again, I don't know if this is now the happy place or whether this is the norm. If it would certainly help the economy if the oil price collapsed, but we'll see. So again, a lot of interest in buying oil at these prices. They are a good level to buy oil at. It's seen as the floor often, $60 a barrel. Yeah, a lot of buying around this level as well. The $65 a barrel. Yeah, always a very good area. 60 to 65 is kind of, when it starts getting too much above there, you know, it's not economical to run cars and stuff. You know, everything works on oil. Every single product, all your clothing has got oil products in it. Everything you wash with has got oil products in it to a certain extent. It's used in everything that makes everything move. It's the thing that drives the entire world. Every wind farm goes up has got gallons of the stuff in it. Crazy, isn't it? How do you manufacture wind farms? Places that use oil. It's the thing that makes every single thing on the planet move, right? So it's a very important commodity. This is why we had all this problem here, because Russia controls the flow of it. Yeah. So it went through the roof because Russia turned it off. Right, let me catch up on chat. No joke, so many have lost so much Friday. It will take a while to deal with the margin calls and getting more money from mum. Yeah. In the pushes like this, when institutions making money, then when they will reverse, it will be the same light speed. Yeah, so basically, if you look at the VIX, the volatility index, basically, all the volatility index is a measurement of volatility, a measurement of movement. VIX is going through the roof. Last time the VIX went through the roof was COVID. Every time you have a financial crash, VIX goes through the roof. So yes, when you've got a massive amount of volatility, if that momentum is maintained, the move back will be as fast. So all that's happened is, if you think about what you see on the chart here as a normal day, yeah, this is a normal day. A normal day is price movement from high to low. It's your ADR, your average daily range. Yeah. What's happened over the last 2 days is your normal movement is through a magnifying glass. Yeah. So you're just zooming into a magnified version. Volatility index has gone up. Therefore, range has expanded, and range will stay expanded while there is interest for volatility. When the market returns to normal volatility ranges, the candlesticks will return back to normal size. So the question is whether this will come back as fast as it's gone down. The only way to answer that is volatility going to remain high? If yes, we'll be back here within 48 hours, maybe 3 days, maybe 5 days, don't know. But if volatility remains at these levels, we can get back here very, very quick. If volatility suddenly returns to norm, which is this size of candle here, yeah, so on oil today, so far, we're very early, obviously, but volatility has returned to normal. Okay, so if volatility from here on is going to be at normal levels, it will take 1, 2, 3, 4, 5, 6 days to do that much movement. So 6 days, 2 weeks. So you could take 2, maybe 3 weeks of solid bull price action to get back here if volatility returns to normal. If volatility remains the same, we could be back here by Wednesday. But again, unless you have a crystal ball, there isn't anybody on this planet right now that can tell you what is going to happen today or tomorrow. So right now, we've got a normal range. Come and see me at 10 p.m. this evening, and this candlestick could be that big. I have no idea. Yeah. And if the candlestick is that big, we've got a big problem, haven't we? So, this is the thing. It's a day-by-day thing, and it's a case of, on these sorts of time frames, getting into price action on these sorts of time frames, you are looking at price action on this time frame today. So right now, this is a chart. Yeah. Doesn't matter whether this chart is bigger or smaller than Friday's. This is the chart right now. So if you're trading price action right now and you press the buy button here and your stop loss is there, yeah, your reward is there. That's what it is. This could be a 1 hour, a 10-day time frame. It could be a 5-minute. It could be a tick chart. It could be any time frame under the sun on any instrument on the planet. Yeah. Trading is trading. This is how price is moving now. So you trade how price is moving now. If you were trading with a stop loss of, right here, we got a stop loss of 23 at the moment on this. If last Tuesday the stop loss on this was 7, that's what it was. Today it's 23 because today it's moving fast and hard. You just adjust to what it's doing right now. This is why ADR is so important, and ATR. Yeah. So if you put an ATR, put the ATR indicator on your chart, and use an ATR 10. Yeah. This is what price is doing at the moment. It's moving on it, and let's pick something that makes sense. FX pair. Yeah, it's moving at 12 pips on average. Every 5-minute candle is roughly 12 pips. Yeah. The average daily range on this was last week somewhere in the region of 40 pips a day, right? Today, it's moving 12 pips in 5 minutes, right? So back last week, a 12 pip range would have been something in the region of 20% of its average daily range. Today, a 12 pip movement is 1 5-minute candle. So you're just adjusting. So your risk, so last Tuesday, I'd have taken a 0.7 lot long. Today, I take a 0.17 lot long because today I need to use a lot less risk because my stop loss has got to be so much further away. My calculation of my lot size has got to be so different to what it was last week because this market is moving completely differently. Whether it stays like this for the rest of the day, I have no idea. It could return back to doing this type of candlestick instead of this type of candlestick. Yeah, you can't predict anything. It's impossible to predict anything in this type of market. You have to just adapt. And this is why people's strategies fail all the time. This is a great example of what I go on about all the time. If you use a fixed TP and stop loss in any strategy, it will never succeed because the market is not the same. Every single day, there is never a candlestick pattern that you can see on another day in history ever. The daily movement we had on Friday has never been replicated in the past, and it will never be replicated in the future in that way, in that volume, in that size of candlestick, in that order. So if you trade the same way as you did on Friday every day, you will fail every day. It doesn't work. You can't do it. So it's a case of just adapting to what the market is doing. And for me personally at the moment, it's getting down onto these time frames and just getting in and out fast. Yeah. And a lot of other people will be saying the opposite thing. They'll be going, oh, don't trade those choppy little time frames. You want to be out on the daily charts. That's fine. Do what you like. For me, this is how I'm going to find it easier to make money. Because when you've got to pay bills, you have to adapt to what the market's doing. You can't trade in the same way as this. because that is not that. So you change. Yeah. The thing that doesn't change is market structure. Yeah. The way the market gets from A to B, the speed it gets from A to B is still the same. Yeah. There are more sellers involved in the market now than there are buyers. That was the same on Thursday last week. That was the same on Monday last week. It was the same in COVID. It was the same 2 years ago. It's the same last Thursday. It's the same 3 weeks again last Friday. Whatever day you pick, doesn't matter. Structure is structure. That doesn't change. Market structure is always going to be the same. Sellers have taken control of the market. If sellers continue to take control of the market, that's what's going to happen. If sellers lose control of the market, that is going to happen. Those are the odds you have today. Those are the odds you had last week. Those are the odds you had last month. That hasn't changed. But how you do it has got to change. That's got to be different. Staircase up, express elevator down. Yeah. Old millionaires gone, new ones to be made. Yeah, I was reading something last week, about how we've now got 15 trillionaires. 2 years ago, we didn't have one. Yeah, we've got 15 of them now. The wealth is being absolutely sucked out of every human being on the planet into a tiny, tiny minority now. It used to be the 1% club, didn't it? Yeah, 1% of the population holds 99% of the wealth. It's not that anymore. It's about 10. 10 of them hold 99% of the wealth. Scary. Do you see a bit of reversal in the FTSE until Wednesday? No idea. Why until Wednesday? What's Wednesday got to do with anything? From the European market. I mean, the FTSE is the UK stock index. So the DAX is the one you should be asking that question on, because that's a German stock index. So, yeah, I don't know. This market today is in shock mode. Look, it's not. We're not doing anything at the minute, are we? This is the. What do we do now, guys? Today's the day where the analysts have come in early and are sitting there. They're not having the usual coffee and donut or whatever before work and like, let's kick off about 9:30 this morning and blah blah blah. They're in at 6 o'clock this morning, heads down. They haven't put their heads up. They are thinking, what do we do? And until they know what to do, they're not going to execute any orders. Beautiful impact. So yeah, don't know. I don't think anyone can really forecast anything right now. I think what you'll find is going on at the moment with most institutions is, have we got our risk down to acceptable levels? Are we safe? If yes, sit, calm, wait. If we haven't got our risk to acceptable levels, get it to acceptable levels. Yeah. How exposed are we on this? Yeah. I want the same exposure everywhere, because which is going to move, what's going to move, why it's going to move, you don't know. So if you've got 50 assets you can invest in, if you get your entire portfolio split into 50 and spread it across everywhere, your exposure is 1 out of 50 that could go pop. If you're all in the stock market, you're dead. Yeah. Pension funds. I've transferred my pension over yesterday from an index-linked asset to a very, very varied low-risk portfolio. Yeah. So with pensions, you have vast amounts of options out there on what you can invest in, but most pension funds will have, depending on the risk profile that they run, but anything up to 20% invested in international stocks. Yeah. So Thursday, Friday last week, pension funds had 20% of their portfolio drop. Yeah. Which means 80% of their portfolio was secure in a normal world. That 20% in the stock market will also be paired with commodities, which is oil, gas, gold, to a certain extent, but more along the lines of oil and other rare minerals, yeah, which is mainly Australian, New Zealand, and obviously oil you can use to measure the commodities markets. What happened to Aussie, New Zealand, and oil over the last 2 days? Absolutely destroyed. So 20% of their investments in stocks, killed. 20% of their investments in commodities, killed. 60% of their investments in foreign markets held in capital. Depends which capital. If you've got it in the Swissy, if you haven't got it in the Swissy, yeah, pension funds absolutely wiped clean over the last 48 hours. They're all going to be sitting there on the phone to the investment arms of the banks going, what do we do? Analysts, I'll come back to you next week. I haven't got a clue. Yeah. So this is, I think, what we'll see today potentially is a bit of a sideways movement followed by a, okay, we've made a decision. And that decision is going to be either up or down, isn't it? And I think the volatility is going to come back in. But timing, this is one thing you can't do, is that you cannot time the market. Impossible to time. Reports are that Friday had record options buying. Quite possibly, yeah. Puts or calls, though, you know, you're always going to have people that are going to, in these sorts of times, you're always going to have people that are going to make a hell of a lot of money by getting the call right. Yeah, people that bought into crypto at the start made millions on the pop. You're always going to have people that are going to buy this, and they're going to make a lot of money if it recovers very quickly. But the options tend to be monthly, quarterly, obviously. So what options buyers are going to be doing now is looking at 3-month holds. So what they're essentially doing is betting on a bull or a bear market for the rest of this year. So if there's record buy options going in, they're betting on a recovery. If there's record bear options going in, they're betting on a collapse. One of those two things is going to happen. The DAX here, for example, we're either going to be back up here within the next 3 to 6 months, or we're not. And if we're not, we know we're in a bear market. That's it. Yeah, that's the definition of a bear market. High, low, lower high, lower low. That's market structure in a bear market. Market structure in a bull market is the opposite. Yeah, this is your bull buy. But, I mean, you wouldn't normally... I mean, look at this support here. I mean, it's just absolute... This is the thing that is the unknown. This is absolute textbook buy zone. Isn't it? Look at it. Support. Resistance. Resistance. Break. Support. 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 Absolutely textbook where you will buy it. Right? Resistance. Support, absolutely textbook where you would buy it. If you bought that, you're break even. What are you doing at that point? Selling, driving the market through the lows into the next area the buyers were at. We've actually peaked through that, so there's probably a lot of sells triggered in there. We are now sitting in this area here. It's going bull or bear from here, and if it goes bear from here, it's obviously technically it's coming down to there, but this is what I'm saying about technicals. A technical level is literally a zone with a massive buy or sell orders, which holds price. The people that were buying here, who are the people that were trying to sell here and flip long, that was back in July last year. What has today got to do with July last year? The market is not July last year. The market is totally different. This is why we're in this mess, because the whole thing's just been blown apart. Yeah, the market as it existed back here doesn't exist. Nobody's got orders at these levels. There's no bank or institutional orders at these levels, I don't think, going, oh, when it gets down there, we'll buy it again. Why would you buy it again down there? Yeah, you just sold it all because you bought it here. You're out. You're done. Flat. Masses of profit in the bank. In fact, you made your profit up here because everyone else would have been late. What do you do from here? impossible, isn't it? Impossible situation. So get in, but the buy the dippers, they'll be all over this, and that would be me normally. And I'm still not convinced it's not the right thing to do. But it's. I mean, look at this. It's price action wise. This is just the best. This is the best buy ever, isn't it? Look at the size of that tail on the DAX. They are rejecting lower prices. Yeah. So there is a lot of interest in buying German stocks this morning. Yeah. TP1, higher low. TP2, V-shaped recovery. That is one scenario. Which do you prefer? The holy crap, we're going to sell off for the next week, or this is it, we found the low. 3-bar reversal. Look at that. Textbook 3-bar reversal. It's not yet because we've got 12 minutes left. It's definitely not a 3-bar reversal. That is an indecision candle. They are not buying, they are not selling. But if that was, be all over it. It's not. So we'll have to wait and see, won't we? I mean, there's absolutely no one on the planet that can help you at the minute, me included. So go and press the button on something and sit there and see what happens. That's all you can do. It's going to be one of those weeks this week. It's going to be fun. I'm just going to see if there's any other news that's come out this morning while I've been waffling away. See this here, look, traders fully price 5 Fed interest rate cuts. That's just the market collapsing, triggering a when this happens, that's what normally happens scenario. This is not normal, so you can kind of ignore all this. Traders boost ECB rate bets, favoring 4 more 25% basis cuts in 2025. Again, this is utter nonsense. The ECB are going to come out on Wednesday and completely change their economic stance on trade. You cannot say today that there's 25 basis point cuts coming 4 times this year. Yeah. No one in the ECB, Lagarde, is not going to be sitting there going, we are going to continue to cut interest rates. That conversation, I can tell you, is not happening at the moment in the European Central Bank. We are to accelerate free trade cooperation with other countries. Panic. Anyway, right. So there we go. No news today. No news tomorrow. So Wednesday's obviously first interest rate change for the New Zealand, and then obviously we'll wait and see what happens with this this euro stuff. We'll probably get drip fed bits and bobs, I should suspect. So you'll probably get some movement coming this week on these on the euro side of things anyway. But yeah, see how you get on. I will be in Discord. Obviously anything I see that's of any interest I'll post, but right now it's a case of just sitting and waiting and see what happens. But strategy is the same as normal, risk reward, just get in and see what happens. No trades on SIH this morning. Obviously the ranges are miles out. Yeah. So the SIH, unfortunately on SIH, unfortunately on SIH, you can't change the ADR. I never bothered putting that in there because who'd have thought you'd ever need to change that? So there's no inputs for that. So the SIH at the moment, obviously, the ADR 10 is way off. So the range sizes you're going to get at the moment are going to be like off the scale. So look, this is a great example. Look, maximum range is 8347. ADR or the range today on the 15-minute was 36,700. So that is a normal range. That is today's range. Yeah, 15-minute. Yeah, so this is how much it's moved in 5 to 15 minutes. That's how much it normally moves in 5 to 15 minutes. So again, this is to be honest, this is probably a safer EA at the moment, SIH, because it's going to sit there and do nothing, which is probably the safest thing to do. So you need to wait for everything to normalize. So there may not be any trades taken on this over the next few days, because it's just not going to find those ranges. As we start to normalize, and obviously every day gets knocked off and those 10 days move forward, it will re-normalize, and then it will start to find ranges it can trade again. But at the minute, it's doing the right thing. It's sitting there going, you're nuts, this thing's moved like 5 times the normal range. We're not trading that, because it's not a norm. The strategy is based on historical edge. It's not an historical edge playing out here, is there? So it's doing exactly the right thing. It's sitting there waiting. Right, I will be back. Right, so this week we're on holidays in the UK now, this week and next week. So I'm going to be changing the streams. What I might do is take Tuesday and Thursdays off now, and just do Mondays, Wednesdays, and Fridays for the moment. So I'm going to just redo the website and have a think about it again this morning, but I think that's what I've decided to do. So what I might do is do 2 streams a day on a Monday, a Monday, Wednesday, and Thursday, and Friday. I can't get my words out. And then have Tuesdays and Thursdays off. Member streams still on Wednesdays. So do 2 streams a day, but keep those streams short. Obviously, this morning's one's been a bit longer because there's a hell of a lot to talk about. But I want to trade the opens basically live. So coming on in New York as well, is the logical thing to do. So I'm probably not going to do it today, but I will set up the streams and set up the schedules. So I'll probably do Wednesday morning and afternoon, a Friday morning and afternoon, but not tomorrow and not on Thursday. But I'm going to see how it goes. It might be one of those where I just think I need to do one today because this has happened. So I think at the moment it's a play it by ear type thing, because if something dramatic happens, we will need to obviously have a look at it. But right now everything's in fallout mode. So get your aviation suits on, hunker down, get in your bunkers, and wait for it all to blow over. All right, so have a good day. I'll be back on Wednesday morning for members and Wednesday afternoon, but I will be in Discord, so I'm around in there if you need anything, and then we'll obviously we'll discuss it as we go. Or brown pants, yeah, as Deadpool would say. That guy wore the brown pants. Yeah, or basically just trade from the toilet, then you don't have to wear them. I'll leave you with that. I'll see you next time. Have a good day.